welcome. You are watching News 9 Live. This is Business Plus. I'm Krishnakumar, and joining me in the studios is Suyash, Maheshwari as always. Suyash, let's begin as always with today's market action. Markets finding a volatile session of trading in a close, narrow range, and eventually snapping a 7-day winning streak.
Yes, Krishna, the market turned highly volatile after opening in the green. Now, Nifty at open scaled a new lifetime high of about 21,110. Also, Sensex opened 300 points higher, just 200 points shy of its record high levels. But after that, we saw selling pressure, and as a result, Nifty specifically was trading in the red for the majority of the session and ended with marginal losses and snapped its 7-day winning run. Now, the big losers of, as you can see, today's segment were the mid cap and the small cap indices, which succumbed to profit booking. The small cap index ended about 4% lower, whereas a mid cap index ended 3% lower. Another thing that we need to point out is that volatility index, which is a fear index, India VIX, climbed about 3%, but it's currently still sits below the 12 mark, which indicates that the volatility is lower. But compared to the previous session, we have seen a 3% spike in volatility.
All right, before we get into the finer details of the day's trading session, talk to us what else moved the markets, what are the big gainers and losers?
So, when we are talking about the sectors, as we said, auto index was among the top losers in today's trade. Apart from auto, pharma and IT were actually the outperformers. They ended with decent gains. IT and pharma were the outperformers. Right. They ended the day in the green with margin, like Nifty IT was up about 1%, whereas pharma ended marginally higher. Among losers, Krishna, was the media pack. The index Nifty media fell about 4%, followed by a 2.38% decline in the PSU stocks. Apart from that, metal index also saw some profit booking at higher levels. The metal index, which has been rallying for the past couple of weeks or so, was down about 2.67% in today's trade. Now, looking at the top losers and the gainers today, let's first go to the losers. BPCL was the biggest loser among blue chip stocks. It was down about 3.8% in today's trade. NTPC was down 3.6%. Power Grid Corporation, Adani Enterprises, Coal India also fell about 3% each. Now, among the gainers today in the Nifty pack was TCS. We saw some buying action in TCS and Infosys, as indicated by the outperformance of IT stocks. TCS was a top gainer in today's session, and it was up about 2.5% in today's trade. L&T, which raised the buyback price from 3,000 to 3,200 and has been on a run up. The stock has rallied about 30% in 3 months time or so. Continued to gain today. It closed just shy of the 3,000 mark and was up about 1.88% in today's trade. Infosys was another IT bellwether stock that posted solid gains today. It was up about 1.66%. Ultratech Cement and Dr. Reddy's also gained about 1.4% in today's trade, Krishna.
Right, that's Suyash there with the day's trading session. We also have Mr. Avinash, Gorakshakar, Director Research, Profitmart Securities, joining us live on this broadcast. Avinash, thank you so much for taking time out. Tell us, not much moving the markets, barring that piece of news, or rather misinformed news that moved the auto stocks for the day.
Yeah, I think, Krishna, this news which came in the market in the afternoon, I think rattled most of the diesel segment stocks within the auto pack. But I think there was a clarification later on by the minister saying that, nothing of this sort is in the works. I think a clear misstatement, from his side. And I think the markets were immediately concerned that if at all a 10% GST, an additional GST comes in as a pollution tax, that would have definitely impacted margins of players like Tata Motors, Ashok Leyland, Mahindra. But I think all things done, I think this is not a possibility. And I think we'll have to wait for the budget to spell out something more specific here. But I think the markets were clearly disappointed. By the time the markets recovered, a large part of the damage had already been done. So I think probably you'll see a good bounce back, in tomorrow's session, because earnings are unlikely to get impacted. And specifically for segments like passenger cars and commercial vehicles, the diesel component is a very important component. So I think all said and done, I think the markets will now look at the road forward. I think this news has been fully discounted. And I don't think you're going to see any further damage for these stocks in tomorrow's trading session.
Right.
Now, Avinash, one of the stories was that we finally saw some profit booking in the mid cap and the small cap space. Mid cap index was down about 4%, small cap index down about 3%. So, is it finally time to see some see some correction in the broader markets?
Yeah, I think clearly, mid caps were trading at all-time highs, and I think a correction was expected sooner than later. And I think, see, you must understand one thing that within the small cap, mid cap basket, we had seen that substandard quality stocks had also risen quite significantly. So I think, obviously companies which were well managed and obviously companies which have got very strong earnings growth trajectories expected going forward are unlikely to be badly impacted. But whenever a correction of this sort comes in, then I think obviously, the entire markets get shaken up, and that is exactly what has happened. Maybe we could see this trend for the next 2 to 3 days before stability comes in. But my sense is that this also offers an opportunity for investors who would actually miss the bus in buying good quality mid cap stocks. So I think it's not the end of the road, but yes, I think some caution will have to be taken. Markets would now realign and start looking at even large cap companies like Larsen and Toubro, HDFC Bank, ICICI Bank, which have not moved at all and where fundamentals continue to be strong. So some sort of, stock reshuffling will do happen. But yes, mid cap story is not over. I think it's only a big profit booking move and it's not a kind of a panic sell-off.
Right. Even as we're discussing this, we are awaiting inflation data. Avinash, talk to us. So far, estimates say it's going to stay above that 7% mark. Assuming that it's going to be above 7%, are you assuming it's going to be above the 7% mark? And more importantly, is the market assuming it, and has it already factored in the price?
See, I think inflation will continue to stay elevated. Now, whether it comes above 7% or closer to 7%, I think what is important is that, most of the sectors like FMCG or typically, consumer durables, these are the sectors which are going to be impacted badly because inflation hurts these sectors the most. I believe, sectors like real estate or for that reason, housing, typically, I think despite repeated increase in interest rates in the economy, the inventory sales have been pretty solid. So I believe that clearly, I think if at all inflation comes at a higher level and possibly, in the coming RBI policy, there is no further kind of rate cut, possibly we could see another 25 basis point hike, then I think the markets would take it negatively. I think as of now, I think the markets have not digested this. If at all the inflation numbers is above 7%, then I think near term, I think trajectory for the markets could again be a little, volatile, and we could see a little bit of selling because this is definitely not good news. That clearly shows that the economy is overheated, and I think probably you would have to cool it down in the near term.
Now, Avinash, one of the biggest underperformers in today's session was the PSU banks. Now, Nifty bank and banking stocks had just joined the rally, and we were expecting some sort of it to drive indices to much higher levels. But now today we saw some correction. I think the PSU index was down about 2.38% in today's session. So, what's a big overhang for the PSU stocks, PSU banking stocks specifically?
No, I think, see, PSU banking stocks have been underperforming because largely there have been some fears in the market that credit growth now could come down to single digits. And if inflation moves up, then I think, very sensitive product segments like housing finance and specifically, real estate demand is definitely bound to be impacted. I think till now, nothing of that sort has happened. But if inflation continues to go up further and interest rates continue to go up, then banks would obviously find their yields to go down. And I think you could see some pressure on their profitability. As far as the PSU banks are concerned, the other fear in the market is that the government has constantly used higher prices to offer, offer for sale kind of opportunities. And that also has been a drag factor for some of the small size, medium sized banks. So I think you're going to see a lot of sluggishness at least for another one or quarter. And hopefully the second half of FY24 should be significantly better. If the monsoon is good, inflation cools off, and we see rural demand picking up, then I think banks should do well. And that's why I would believe that post-September, that is the second half of FY24 should be better. But yes, the second quarter numbers could be a little depressing and a little, negative, from the market standpoint.
Now, the rally that we were seeing in the banking stocks, was it on the back of RBI removing the incremental cash reserve ratio, which had, squeezed out that excess liquidity? So the liquidity is going to be back in the markets. So how will that bode for banks?
So I think, see, liquidity has been pretty comfortable, and despite the RBI's efforts, credit growth was in double digits. So I think these kind of measures, the RBI was just trying to control liquidity in the system. My sense is that possibly, after September, we could get a clearer sense as to what is the kind of credit demand, what is the liquidity in the system. But as of now, I don't think that is going to have any significant impact on the near-term kind of, bank stocks outperformance. I think everyone is aware that PSU banks have been sluggish for the last, 1 to 2 quarters compared to the private sector banks. And I think this is the fact that probably people are thinking markets are, factoring that credit growth, which was 12, 14%, would now come down to realistic levels of 6 to 8%. If at all that happens, then I think the expansion of balance sheets would be a little difficult as compared to last year. So I think credit growth in the system is going to be critical. And plus, of course, how inflation cools off, how the monsoon performs. These are all macro factors which would impact the banks going ahead.
Now, Avinash, in the last 7 days, Nifty was able to, climb about 750 points, and everyone seems to be participating in the rally. Retail investment is at all-time high. Domestic institutional investors have continuously poured in money, but foreign institutional investors continue to remain absent. Now, what do you think will bring them back to the table?
Yeah, I think FIs are very closely looking at the movement of the rupee. If the rupee continues to depreciate, then I think FI flows would be little moderated. And more importantly, I would believe that, as of now, I think most of the FIs are sitting on cash, considering the fact that they were quite long expecting a correction in the broader market. As far as the mid caps, small caps are concerned, there were a lot of FIs and a lot of funds who had invested in these companies ever since the rally in April started. So I think it's going to be a selective kind of strategy from them. I would believe that FIs would still continue to look at the Indian markets, considering the kind of alpha generation they have made in the smaller and mid cap companies. And large cap companies currently trade at fair to attractive valuation, specifically if you look at the private sector banks like ICICI, SDFC Bank, IndusInd Bank, and obviously large infrastructure players like L&T. I would believe that, on the ground, earnings trajectory is going to be solid, but I think it requires a little more time before we see a large part of that FI liquidity coming in. So post September, I think things should normalize. As of now, I think they would obviously be on the fence and look at better opportunities at lower levels.
Look for better opportunities at lower levels. The word coming in from Mr. Avinash Gorakshakar as we discussed that trajectory of Nifty. Avinash, thank you so much for breaking down the day's trading session for us. As always, a pleasure having you. Hope to keep having you here again and again. But for now, we'll let go. Thank you so much for being with us.